Well, for more on Apple's annual shareholders meeting today, we're joined by Eugene Munster. He's the senior research analyst at Piper Jaffray. Eugene has covered Apple for almost a decade. A lot of people follow what he has to say about Apple. And Eugene, you know, today at the shareholders meeting, a lot of people are talking about succession. How much does it matter to you whether or not Apple is more transparent about who succeeds Steve Jobs?
It doesn't matter at all. I mean, the reality is that transparency and game plans doesn't matter. They've done it twice without Steve Jobs, and they've ran the business extremely well. And so I think the fact that they've been road tested, this plan, even though we don't know the details, just look at the substance of what it's been over the last several years. And I think investors are going to be fine with that, and I'm fine with that.
But let's take the flip side then. If it doesn't really matter, then why don't you think Apple would just come out and just give a name or give some idea about what their plan is, if that's going to ease some shareholder concerns?
I think because Steve Jobs is irreplaceable, and I think that the reality is this is his company, and to even talk about a succession plan implies things that aren't worth talking about. And so, you know, they've shown in the past that they can run the business extremely well. Tim Cook has been the CEO appointed twice, and you can kind of fill in the blanks at some level. So I think it's a combination of both of those.
Gene, it's John Erlichman. You may not feel like it's a big deal, but there are some investors who do feel it's a big deal. And you're an analyst who has a very bullish outlook for Apple, suggesting maybe this 40% upside. And you're not even the most bullish Apple analyst. Some might ask, should Wall Street analysts be tougher on Apple on these kinds of issues? I mean, you can push them aside when times are great, but what if Apple were to slide for a little while? That might put more pressure on them to make these changes. So shouldn't the analyst community be a little bit tougher on the company?
Well, I mean, there's always, I would say this, as far as the succession plan is concerned, is the reality is they have not specifically outlined a plan, but again, they've been through this twice before, and so we've seen it in motion versus seeing a plan. And so if they'd never been through it, I absolutely agree. Analysts would be much tougher on it. But I think the fact that we've seen the company run extremely well two times before is I think, in this case, it's not a reason to be tougher on the company.
Sheila Dharmarajan here. Another issue that shareholders have been very vocal about is Apple returning cash to its shareholders. You know, it owns some $44 billion of cash in the books. With Tim Cook at the helm right now, do you think that attitude might change a little bit, or are you also thinking that it's time for Apple to maybe start paying a dividend?
We've kind of given up on that. I mean, when they hit the $25 billion threshold, it was an absurd amount of cash. As you said, it's actually closer to $60 billion. They'll probably exit 2011 with $90 billion in cash. It's almost $100 a share in cash. I mean, it's way past the point of ridiculous, and so we've kind of given up hope for it. And I don't think Tim Cook at the helm would change any of that. At some point, they'll probably have to give some sort of a dividend, but that's been wishful thinking for the past several years.
Gene, John mentioned earlier about your stock price target, and I think it's at $483 for Apple. I think it's trading now, what, at $360 or something like that. So, you know, in this forecast, though, Okay, well, let me backtrack. What we're seeing right now is Apple stock actually sliding a bit. It's gone down about $20, $30 or so in the last few weeks. So what do you think is going on here? Because that's going to make your target that much harder to make.
I think people are just still apprehensive about Steve Jobs. I think that weighs on it. It's weighed on a tremendous amount. And I think also beyond Steve Jobs, investors are worried what the long-term true growth rate of the company is. Most investors that I talk to think that in 2012 and beyond, Apple's going to grow earnings at 15 to 20%. Therefore, it should trade at a multiple lower than 15 times. And so I think that's the typical thinking. People know 2011 is going to be a huge year for Apple, and that sets up for 2012 being a difficult year. I don't agree with that. That 2012 is going to be difficult. It comes down to the mobile opportunity, which I can get into. But I think that fundamentally this story can continue at 25% plus growth longer term.
All right, we'll see. Gene, thank you. Good to see you. Gene Munster of Piper Jaffray.